Hello everybody, this is Lara with your weekly video for gold for the week ending Friday 3rd of June 2022, and I'm going to cover monthly charts this week because now the month of May is over. The first preferred Elliott Wave count is still bearish and has a little more support still from classic technical analysis. It expects that a huge trend change occurred on 8th of March this year and a new bear market may have begun. A new midterm target is at 1731, the first target at cycle degree is at 1037 and the final target for the bear market at super cycle degree is 657. The bullish count still expects the next bull run may have just begun and it must end at or above 2070.48. The final target remains the same at 2587. The price point which differentiates the two wave counts is 1693.69. To the downside, that would invalidate the bullish count and add confidence to the bearish count. To the upside, 1947.33 would do the opposite. That would add confidence to a bullish count and invalidate a bearish count. Analysis, Elliott Wave analysis first and then classic analysis, including monthly charts. At the monthly chart level, this is that prior all-time high, the end of a huge bull market for gold in December 2011, and I'm labelling this Grand Super Cycle Wave 3. When 3 ends, 4 begins, and I'm labelling Grand Super Cycle 4 an incomplete expanded flat, subdividing 3, 3, 5. Expanded flats are common structures, particularly in B waves and also in fourth wave positions. Those are the two most common positions for expanded flats to occur in my research. And so this follows pretty common patterns for a fourth wave. It also expects Grand Super Cycle Wave 4 to last over 10 years, and they should last decades. Grand Super Cycle degrees should actually last generations, so it should be a huge time-consuming correction for Grand Super Cycle Wave 4. The structure of Super Cycle A is a deep double zigzag lasting 4¼ years. Super Cycle B also a double zigzag lasting years and moves beyond the start of A as B waves do within expanded flats. Wave B is a 1.17 length of Wave A. This is within the common range of 1 to 1.38 times the length of Super Cycle A. So this is a common structure fitting a common pattern. When B ends, C begins. C may only subdivide as a 5-wave motive structure, which will be labelled at cycle degree 1, 2, 3, 4, 5. Super Cycle Wave C would be extremely likely to move below the end of A. This is the end of A, the December 2015 low at 1046.27. It would be extremely likely to move below this point to avoid a truncation and a very rare running flat. And if this is the correct wave count, I will expect a reasonable new low below this point. C waves of expanded flats usually move price substantially beyond the end of A waves. The target would see this achieved. At 657, Super Cycle C would reach 1.618, the length of Super Cycle Wave A. Let's take a look now at the weekly chart. The high of Super Cycle B up here is this point up here. Now we're looking at the structures of cycle waves 1 and 2. Cycle 1, a leading expanding diagonal. Cycle 2, a very deep zigzag. Second waves following first wave leading diagonals are commonly very deep. So again, this wave count follows common patterns and behaviours, which is why I have to keep judging it to have a better probability. It also has support from classic analysis. When 2 ends, 3 begins. Cycle wave 3 will reach 2.618, the length of cycle 1 at 1037. I'm using that Fibonacci ratio for this target, considering the depth of cycle 2. Cycle 3 may only subdivide as an impulse. Within it, primary 1 may be incomplete, unfolding as an impulse, intermediate 1, 2, 3, 4, and then 5. When primary 2 arrives, it may not move beyond the start of primary 1 above 2065.89. At the daily chart level, the high of cycle 2 up here is this point up here. Now we're looking at the structure of cycle wave 3 with intermediate 1, 2 and intermediate 3 incomplete, with minor 1, 2 and minor 3 incomplete, with minute 1, 2. This wave count now expects a series of 1, 2, 3 overlapping first and second waves should be complete, and so this wave count now expects an imminent increase in downward momentum. The target for intermediate 3 is for it to reach 1.618, the length of intermediate wave 1, at 1731. Draw a base channel around this downward movement from the start of intermediate 1 to the end of intermediate 2, and then place a parallel copy on the end of intermediate 1. This downward movement for minute 1 slightly overshot the base channel, price bounced up from there. If the bounce continues any higher or is more longer lasting, if it reaches the upper edge of the channel, expect strong resistance there. Price found resistance here and again here. It may happen again. Although it looks like, again, minute wave 2 may be complete at the end of this week. If it continues higher, it may not move beyond the start of 1, above 1947.33. At the monthly chart level, this is the bullish wave count. The structures are the same down to this point here, but I've moved the degree of labelling within the double zigzag up 1 degree. If grand supercycle 4 is over here, though, it would have lasted only 4.25 years. That is way too brief for a fourth wave at grand supercycle degree, and that reduces the probability of this wave count. Elliott wave is fractal. You have to fit this all into the bigger picture. So to see why I've got grand supercycle 3 high over here, you'll have to look at my grand supercycle analysis, which I link to at the beginning of every article. If 4 is over there, then 5 has begun, and within it, supercycle wave 1 would be an incomplete impulse with cycle 1, 2, 3, 4, and now 5 to complete. This wave count is bullish for the short to mid-term, but after that, it expects an enormous trend change at supercycle degree. When supercycle 1 is over, supercycle 2 would be expected to be a long-lasting bear market, lasting possibly over 10 years, and it may not move beyond the start of 1. It may not last as much as 10 years though. It may just last a few years, but it would still be expected to be a bear market. While cycle 5 is underway, no second wave correction within it may move beyond its start below 1677.64. This channel is important. Draw it from this high of cycle 1 to 3, place a copy on cycle 2. When this channel is breached by downward movement, that would indicate for the bullish wave count that this bull market should be over and the following bear market should have then arrived. Apart from the brevity of grand supercycle 4, there are a couple of other problems in this wave count. In order to see from this low on upward for the first wave, in order to see it a complete 5, it has to be over here. It can't be over here because then it subdivides as a 3. So if cycle 1 is over here, now cycle wave 2 can only fit and make sense if it's a double flat correction. The first flat in the double begins here. It's labelled primary wave W. A, B, C. This is an expanded flat. The first and second flats in the double are joined by a zigzag in the opposite direction labelled X, and here begins wave Y. A, B, C, primary Y is also an expanded flat, so cycle 2 is a double flat correction. In my experience and research, double flats are very rare structures, and so with rare structures in this wave count, in order for it to fit and make sense, that I have to consider that reduces the probability of it. Cycle 3 looks pretty good though. This certainly does look like a third wave. Cycle 4 could be over here as a zigzag, and cycle 5 could be an ending diagonal. There's also another problem in here. There's a little piece of movement in here that's a triangle on the daily chart, and you just have to ignore it. I think it's in here. It could be in here though. I've linked back to prior charts showing this structure. This wave count requires it to be ignored because whether it's in here or here, it's in a second wave position, and you can't see a second wave subdividing as a triangle for its sole corrective structure. Okay, let's take a look at the weekly chart now. The high of cycle 3 up here is this point up here. Cycle 4 could be a single zigzag. A, B, and an extended C wave is an ending expanding diagonal, and cycle 5 could be an ending expanding diagonal. Within an ending diagonal, all of the subwaves may only subdivide as zigzags, so all of primary 1, 2, 3, 4, and 5 must subdivide as zigzags. No problem here with primary 1 or 2. Primary 3 looks okay. Primary 4 does subdivide at lower time frames as a zigzag, that's okay. Primary wave 5 must subdivide as a zigzag. If primary 4 continues any lower, it may not move beyond the start of the end of 2, below 1693.69. The fourth wave of a diagonal must overlap first wave price territory. The rule is it may not move beyond the end of the second wave. This diagonal is expanding because 3 is longer than 1 and 4 is longer than 2, and the trend lines must diverge, and they do. Because the diagonal is expanding, that means 5 must be longer than equality in length with 3. 5 will reach equality in length with 3 at 2164.14, and so for the diagonal to meet the rules regarding wavelengths, 5 must end above 2164.14. The target would see that achieved. Cycle 5 will reach equality in length with cycle 3 at 2587. That's entirely possible for this bullish wave count. At the daily chart level, the high of primary 3 is this point up here. Primary 4 fits as a zigzag with a leading contracting diagonal for intermediate A, a quick sharp zigzag for intermediate B, and a short impulse for intermediate C. The zigzag A, B, C could be complete. Primary 5 may have begun here, must subdivide as a zigzag, A, B, C. Within intermediate A, minor 2 may not move beyond the start of minor 1, below 1791.94. Okay, classic analysis now, starting at the monthly chart. Looks like a double top has probably formed here, and at each of these highs we have bearish candlestick patterns, an evening star candlestick pattern here and a shooting star candlestick pattern here. Resistance holding now at 1910, really strong support below though to come at 1675. For the short term, this last completed downward month has pushed from volume that is bearish. It has a bit of a bullish long lower wick though, so we could see a little bounce to test resistance at 1910 again. But overall this is bearish because volume is obviously pushing price lower for that last month. On balance, volume is going to be interesting next month. At the monthly chart level, it's within a small range, and this support line has 2, possibly 4 tests. On balance volume is at support. This could either halt a fall in price, or if on balance volume breaks below it, it could release energy, and that would provide a bearish signal. ADX is declining at the monthly chart level. The prior extreme upward trend may have ended. ATR is flat as price moves mostly sideways within this consolidation. Resistance 1910, strong support 1675 at the monthly chart level. RSI neutral, stochastics neutral. At the weekly chart level, now we're looking at that larger consolidation within it. Swing to support, resistance, and now moving down to support. ADX declining. This swing up to resistance at the weekly chart level did eventually indicate at the weekly chart level an upward trend, and it ended with a shooting star candlestick and a bearish engulfing pattern. There was a symmetrical triangle here. The target wasn't reached, and when the shooting star pattern formed, I warned that it probably wouldn't be reached, and now price is moving lower. Strong support coming up below at 1675. The short-term volume profile at the weekly chart level is bearish. Volume pushes price lower in these downward weeks, and now smaller range upward weeks come with overall weaker volume. The spinning top candlestick this week represents indecision, a balance of bulls and bears. On balance volume has no new range. I've put a new support line in here. RSI neutral, ADX declining, indicating no clear trend. The DX lines now whipsawing. Stochastics returning to neutral, ATR flattening off. Overall, because of the volume profile, this for the short term looks bearish. These 3 weeks here look like a small pause or counter trend movement. And looking inside the week, this looks like a corrective structure, resistance for the short term at 1880, support at 1850. Upward movement here, declining volume, but the dark cloud cover for Friday's session provides a bearish candlestick reversal pattern, but it has weak volume. On balance volume gives no signal. It's got a tight range. There should be a breakout on Monday to give a signal. ADX declining, no clear trend. RSI neutral, stochastics overbought, and ATR declining. Overall, this looks like a counter-trend movement, and now price is moving sideways in a consolidation. Within recent movement, it is this downward session which is strongest, so the short-term volume profile at the weekly and daily chart level is bearish, but a little bit of concern for the fact that the dark cloud cover does not have push from volume. However, bearish candlestick patterns don't require support from volume for confidence, but when you have it, it adds more confidence because price can fall of its own weight. That's a shorthand way of saying price can fall due to a lack of activity from buyers just as easily as it can from increased activity from sellers. That's all from me this week with your gold analysis, and I hope everyone's looking forward to an awesome weekend.